we've got just, let's see, we've got like 1.5 minutes to go until we get the PPI numbers. So what I'm going to go ahead and do is I'll set up my charts here for us to keep an eye on everything. So let's go ahead and put the dollar index in the top left-hand side of the screen. So for those of you who are, for each different market, I'll give you the outline. So in the top left, we have the dollar index. In the bottom left, we're going to keep our gold chart here. In the bottom right, for my fellow index traders, we're going to keep the S&P. And in the top right, we're going to put the euro. Heads up on those of you who are trying to keep up with what I'm personally trading. I haven't mentioned this just yet, but I am out of my S&P trade. Members, you guys know I took my profits yesterday on that. Same thing with the euro dollar. I'm actually feeling really glad that I did that. I ended up closing out of my euro dollar trade. That was a long position for profits before it rolled over further. So I didn't like that CPI print yesterday. I went ahead and closed positions off of that, and that ended up being a decent decision. So we'll watch that one close. But again, we've got about 40 seconds here, guys. I just want to give you the heads up. PPI could cause some volatility, and please be careful with that. But remember that the trade setups usually occur after on these streams. We do not talk about, trading the spike. I believe that to be a gambler's sort of playground, and I'm not a big fan of that. So I like to trade the aftermath. I like to look for setups that have good risk to reward following the news. We got about 10 seconds here to go. So here comes our breaking news. All right. So let's see what we get here for producer price index. Numbers should be coming out. Dollar index down initially here. We've got euro dollar pushing higher. S&P trading a bit higher. Gold also trading a bit higher. And again, that dollar index making a pretty good push lower. 47.80 on the S&P, euro dollar trading up to 1.097 just about. Gold 2050 is hit. 2050 is, of course, the number there. Let's take a look at the print and see what we got here on the numbers. Numbers still pending. All right, and we got 0% core PPI and PPI. So both of them were lower than expected. That is, of course, a good sign for people who are in the disinflation trend. Definitely more of a dollar bearish report, at least on the initial reaction. So that would make sense. I mean, you're seeing the S&P push higher, seeing gold push higher, euro push higher, and the dollar index itself is actually pushing lower. So very interesting to see that here this morning. Let's go ahead and go back to our full screen. And again, there is the dollar index. Take a look at the 4-hour chart, rejecting yet again this level. And again, to our theory earlier, this does not change the overall dollar bearish structure that we have on the daily chart, right? Remember, we pointed this out. Daily chart is still just sitting at resistance. And in fact, this brings me back into a little bit more confidence of potentially getting short the dollar by proxy, whether that means being long gold, perhaps looking at euro dollar a little closer. Let's take a look at that EU position. So EU, see, I entered off of this candle here, entered here and held for a few candles, ended up closing out after the CPI number. But this PPI number kind of brings me back into the idea. Am I going to enter at this current level? No, I would prefer to see if I can get a lower entry point. But euro dollar has been also really choppy. So I'm kind of just waiting to see if we get some momentum to pick up. Look at that. Gold loves this here today. Gold pushing higher off of this number. Producer price index cooling, showing some disinflationary trends that the market, of course, loves, at least right now. And gold definitely loving that a lot. You got silver up 2%, by the way. That's a huge move for the metals. Big push higher. The Dow trading lower still. NASDAQ flat on the day. S&P flat on the day. After a big sell-off, came right back. Kind of an interesting move there on the S&P side of things.
Want to stay up to date with all the latest trading information? In the description below, you'll find the link to join our free Discord. The Discord gives you instant access to lots of helpful material like free trading courses, chart analysis, updates about what's happening in the A1 community, as well as discount codes for our other products and services. The best part, all of this and more is 100% free. So go down in the description below this video and check it out for yourself. If you're interested in upgrading to the full VIP Discord featuring our team of expert traders signals, you can use the live chat link in the description to get connected with one of our team members in seconds. So don't wait, go check out the free Discord today.
We'll take a look at retail positioning also, guys. Always a useful indicator is to keep an eye on what retail positions are looking like. What are they bullish? What are they bearish, etc. We use this as a contrarian indicator. And if you're not familiar with retail positioning, what we can do is we can look at what retail traders are long or short, and we can say if they're really long something, that actually could be a potential contrarian signal or a bearish signal because, again, we know retail traders, unfortunately, typically are on the wrong side of a trade. So, we're going to keep an eye on that one. Like right now, gold is like 55.45, so it's kind of mixed. You're getting some readings like dollar yen still very strongly bearish for retail traders, so that could be a bullish signal. Let's go take a look at dollar yen. By the way, I bet you it pulled back here today. Dollar yen pulling back. I'd say structure still overall bullish, but we'll have to keep an eye on that one. Again, we've got gold mixed sentiment as we speak, so we'll keep an eye on that one. Smart money indicator. I want to look at this from a euro dollar positioning standpoint. So what the smart money indicator, what it does is it allows us to track institutional money flow versus retail positioning. So this is one of my favorite indicators on the Edge Finder because it allows us to look at, so I mentioned euro dollar. What I like about euro dollar is look at the divergence. Okay. So in blue, we can see that institutional money has been slowly accumulating long on the euro dollar. And again, this is not guesswork. I'm not guessing based on a candlestick pattern what institutional money is doing. No. None of that. I am looking at the CFTC's report of what institutional money is doing. What are they buying? What are they selling? Right? No guesswork involved. I personally try and leave as little guesswork and as much data as I can in my trading. When it comes to net retail sentiment, retail, meanwhile, is bearish. So when you look at the euro and you say, oh, okay, so retail is shorting it and big money is building a long position, what does that tell you? Well, there's a divergence in the sentiment. One is generally more credible, I would argue, than the other. And so I do like this divergence and I keep a close eye on it. Of course, if you trade like gold or you trade GJ, you can just select these on your own. If inflation is cooling, it means the Fed may be sooner to cut rates. Cutting rates makes the currency a little weaker as basically borrowing costs goes down. People go out and they spend more and the dollar is less in favor. Especially relative to other currencies that perhaps are not so soon to rate cut. Perhaps an example for currency traders out there could be the pound. The pound seems to be a little bit in the inflation department. Let's go take a look. We can do a cool, quick little study on the Edge Finder. If you just go to the inflation tab, by the way, if you have the Edge Finder, do you want to do this on your own? I find this to be pretty cool. Go dollar and go pound, right? And what we can see here is that here is the UK's inflation situation and the US's inflation situation. Both of them want to get to 2%. Okay. Obviously, you can see that the US is somewhat closer to that number. So what you could perhaps kind of assume there is that there may be the case that the Fed could start to be a little bit more dovish sooner. That's what we've started to see already. And if that is kind of the exchange where the dollar, the US is a bit more on the dovish side of things and the British pound is lagging in that area, the pound could actually look a little stronger relative to the dollar. Kenzo, we had the CPI number and the producer price index come out here today. Well, CPI was yesterday, but what was your takeaway from that situation? Having hotter than expected CPI and I guess cooler than expected PPI, what are your thoughts here right now in reaction to all of this news?
Yeah, actually on CPI, it's quite similar to what we saw on NFP. So the number were better, but it's not really surprising because we come in from festive season. So obviously, people were spending a lot. So the number mostly January, Feb, the number pushes up. That's why the market did not really react aggressively to those numbers. So I think the most important one is going to be from March going further. For now, the market is not convinced at all. So which means, yeah, the dollar is still very, very weak. So I'm still expecting to see the market continuing going down on DXY, which means on the other ones like gold, Euro USD, and the other ones will be pushing to the upside. That's what I'm thinking.
Yeah, I was going to ask you about gold too, Kenzo. I mean, you've got gold here pushing off of the lows. I believe that it's kind of a dual, at least from what I can tell. You have the producer price index number coming out, cool, but there's like a dual effect here where we also have some tension in the Middle East going on as well, which has potentially spiked some concern. What gave me kind of an early read to that, Kenzo, was I was looking at it and I saw the dollar index was up, oil was up, and gold were up. Meanwhile, stock indices were down all at the same time. That generally would tell me that there's a little bit of concern or fear in the world. But do you think, gold, like you just said, the dollar index looking potentially overall bearish? Do you think that this could last? That this momentum here for gold could continue, perhaps to retest like 2080, like a retest of this resistance that we saw? What do you think?
Yeah, I hope if you still remember, gold it's actually a safe haven for most investors. So whatever that's happening in this geopolitical news all over the world, they boost the dollar. Plus, beside any geopolitical news, we can still go back on the US soil and say, you know what? They told us something. FOMC, we're still expecting them to cut the rate. So even though it looks like it's not really going to be easy for them, but that statement means a lot. That's why you see everyone continue buying, selling their dollars and buying gold. So, and I'm still confident. Whatever that's happening, I think maybe on the second half of this year, maybe they can still cut those rates. So, on the long run, I think we are still going to see enough push to the upside. I'm very bullish on gold.
Okay, cool. And Kenzo, is that trade that you have marked up there, is that one that you have open, or is that a pending trade that you're looking to get involved in?
Yeah, this was it's actually the order. Today's order. It was a pending order, but it's already triggered. But this is
Okay.
like the third one because we had the other ones a little bit lower from yesterday, and the time the market was just the time we had some serious volatile. So we have the orders from a little bit lower there. But here is just the other order just to scale up as the market just broke out of this smaller resistance here. If you check here, you will see that we had a resistance that the market was respecting. So this breakout gives us a nice push to the upside. So that was just adding on top of the orders that we already have.
Very nice. So you're catching this gold move. That's awesome. I wish I was in it with you. I was in the S&P 500. I got trailed out of it. I did capture another good move on the S&P. I caught this kind of push that we saw recently, but I did get trailed out yesterday. So I'm watching a couple markets. I'm also bullish on gold, but it looks like I might have missed the move here when it comes to, unless it pulls back. Same thing with the S&P and NASDAQ. I would like to participate if I can get a pullback, but kind of just waiting and seeing as we speak. I am also kind of bullish on oil, which is a little bit of a hedge, considering kind of geopolitical tension, but also it's I think that there's an argument the economies of the world. They are slowing, but not necessarily completely in recession looming fears, right? We still have low unemployment in the United States. We have there's still some arguments to be made that the economy could actually stay strong this year, and that could increase demand for oil. The
Yes,
I
yes.
guess concern, I guess the pushback on oil for me would be that the production of the United States is like a maximum ever right now and expects to be higher in 2025 and 2026. So a lot of production of oil, but will be an interesting market to follow. What about, Kenzo, do you ever trade silver? Do you ever watch silver? I'm curious about that.
Unfortunately not, man. I'm not checking silver currently. Maybe some other times, because focusing on so many things at once, sometimes it can be rough.
Yeah,
You see.
there's too many markets, too many moving things to watch at once. I guess I know you do keep an eye on the Dow and the Nasdaq. Of the two of them, what do you anything sticking out to you on those? What do you think about the indices right now?
Yeah, the overall structure on Nasdaq and USD, they are on a very nice bullish momentum. But since yesterday, I did not really look for any trade. I'm still waiting for them to break their resistance. If you check them, they are very closer to the resistance. They all push into the upside, but we have this area. So where we are, you can continue to buy when the market is very closer to the resistance. So I'd rather wait maybe for a smaller reversal. I thought maybe CPI was going to do that, but they were very strong. The market did not really even push that much. So I will be waiting for a breakout. Then I can say above that, it should show that the market is still aggressively bullish. Then I can buy, or maybe I'd rather wait for a smaller sell. Then I can jump on that buy again. So on USDT, it's just the same thing. Also on S&P 500, I think it's just the same thing. So on USDT, we also have a support, but I did not really take anything because I think the market is now trying to create this type of a wedge structure. So the market might just end up consolidating until we get that breakout. So for now, I'm just out. I think I will see the market maybe next week. I hope maybe we will see a sort of a breakout there.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.